Thanks a lot for your time, Mr. Chauhan. Let me begin by asking you, why do you think the markets have not really responded favorably as far as the budget announcement is concerned? Is there anything to worry about, given that it's been a few hours since the budget and, the market has continued to be in the red?
Broadly speaking, markets run ahead with expectations, and when the actual announcements come, they tend to have a little bit of a pullback. But overall, the budget has been quite on the same track as Mr. Modi has done over last 11 years and Mrs. Nirmala Sitharaman has done for 9 years. That is to consolidate on the fiscal side, reduce the fiscal deficits, reduce debt to GDP ratio, and at the same time also go for infrastructure development, which increases the overall competitiveness of Indian industry. And that's what even this budget is the same. So I don't see too much of a difference between what they have been doing, and that's a tried and tested formula for them that has kept India as the fastest growing large economy for pretty much last 11 years under their regime. So I don't see any difference at all, actually.
But with higher STT on future and options, do you expect any fall in terms of trading volumes or participation, enthusiasm in the derivatives market?
Broadly speaking, again, there was a what I call a perception created and a lot of criticism of government on allowing over speculation in derivatives market, and that I take this as a reaction by the government by increasing the securities transaction tax on the equity derivatives, specifically on futures, which had not been increased before. And options has always had that type of a situation where government of India in their budgets have always increased some amount of STT and options. And in some ways it's part of the trend, but also as a kind of a reaction to the criticism. But over last so many years, we have seen that Indian markets also absorb the STT increase and moves on, because there are many more people participating, many more people coming. Of course, short term, you will see some reaction because of the fact that the algorithms need to be now recalibrated with the new costs, and there might be some pullback due to the extra cost that is coming in. But overall, in the long run, I don't see that type of an issue going forward.
Overall, the government's big focus has been on fiscal prudence. As you mentioned, the budget has targeted a lower fiscal deficit, a falling debt to GDP ratio. From the NSE's point of view, will this improve market confidence, especially in long-term equity investment?
Yeah, absolutely. Because if you look at last 25, 27 years, the BJP governments have always been very fiscally conservative. And this budget also stays on that. Today, our debt to GDP ratio is around 55-56%. Next year it will go down by 1% more. But in next 3-4 years, they have projected it to come down to 50%. If you look at it against the backdrop of America going to 120%, and UK, Europe, all of them going in that similar range, and Japan having 200%, you know that India is now moving towards much more safety than what the developed nations are. In a way, they are becoming more profligate, and countries like India are becoming more conservative in their fiscal management, and also taking their ship into more safer waters, I would say, because global shocks are now continuous in many areas, and the countries which have more fiscal room are much safer in their own policies. And that's what I think even BJP has seen over last 11 years. It's important to have some sort of a lever in your hand rather than being totally tight with the fiscal, and then get external shocks can actually hurt you badly. And that's, I think, we have seen it in last 1 year post Donald Trump's tariff tantrums, and now this entire framework of the UAE FTA and UK FTA, EU, that mother of all deals FTA, Japan, New Zealand, Australia, all the FTAs, once they start coming into play, we will have a seriously large growth engine coming back, because especially in the low-tech areas, more employment generating areas, we were not treated the same way by the world, like they treated China with close to zero or almost zero taxes on their goods. Even Pakistan, Bangladesh had 0% tax on EU garments and all. We were having large amount of tax. So with this new FTAs, we are going to be at par and with China or other countries, and we will probably get many more order for exports going forward.
All right.